Good afternoon, traders. You have your host, Howard Greenberg, here, and I am joined like every Monday and Wednesday with our trading mindset coach, Agnieszka Wood. Agnieszka, how are you doing today?
Hi, Howard. How everybody? I'm doing really good. It's a
Did
new,
you watch that
new
Super Bowl
week.
last night?
I did, and it was actually for the very first time that I sort of like understood more of what's going on
Okay.
because for me, football is soccer. So
That's right. Absolutely. The real football, as they say, right? Um,
right. So usually I would watch it only for the commercials.
yeah.
But yesterday I actually watched the game
Okay.
itself, and we had a little bit group of friends where we also like were betting on the
You're like
score,
the
which
fourth
was
person
good.
I've talked to today that said that. I didn't do that part because I was watching with my 4-year-old. So that's a little, you don't really want to expose her at that point. Um,
Yeah,
but a few people where it's funny to see that, it makes me think that maybe DraftKings, FanDuel, Flutter, some of these
yeah,
companies might be things that are taking more of a foothold that I maybe gave it credit to.
yeah,
Because
yeah,
it wasn't people that I know that are big gamblers either. It was folks that
yeah,
just said, hey, someone had the app and they showed it to me. So we were fooling around and there was 6 of us and, I won $28. I lost $18, whatever it was, but it's
yeah,
engaging people. And that's what's important for the stock. So, I do think that's
yeah.
important to take a look at.
Yeah,
Peter
we were
Lynch.
less sophisticated. We were less sophisticated. We did it with a piece of paper.
Oh, okay. You're just gambling amongst yourselves.
Yes, not
Okay,
the
yeah,
big
that's
things.
a little different.
But
That's illegal in
actually,
50 states, by the way.
oh,
I'm
is
joking. I'm joking.
it? I don't think
Yeah,
it's illegal in Florida.
no,
There's
no,
not
not
many
at
things
all.
that's illegal here.
Yeah, you are right down there. Hey, I wanted to follow up. How did the conference go last week? You had a
Yeah,
very
it,
exciting thing. If you want to bring our viewers sort of up to speed on what
yeah,
was
it
going
was
on.
actually absolutely fantastic. There were so many different speakers across the 3 days from, with totally different point of views, and we had discussion panels. So I was really very happy to see and to talk also to, in fact, my colleagues, trading
Yeah.
mindset coaches, psychology coaches. It's like you really start seeing that the psychology gets much bigger role, plays bigger role, and more gets more focused. So it made me extremely happy. And I got a lot of good feedback from from my clients and also from people that I provide free content for to. I got actually a lot of emails saying how great it was and that they have received a lot of value from all the presentations.
Yeah,
Um,
it's important to get different people's view. It's one of the things we try to do here at Quasar, right? It's why we have so many educators on throughout the trading day that do so many
right.
different facets. But we also have people that are sort of in the same field because it is
Yeah.
different for different people. Even though you might be a mindset coach or a trading psychologist or whatever it might be, you really will have, maybe like you said, there are so many different areas now that are evolving within that industry.
Yeah, because everyone has its own method, right? And
Yeah.
this was really nice to see across all of us presenting like what everyone picks from, from discipline to lifestyle to managing your nervous system to controlling your internal triggers. It's like everyone picks something and says this is the best way. So
Okay.
on one hand it's fantastic to get all those views. On the other hand, just like with strategies, it becomes sort of the same type of container. Now you have all these different methods
I
and
was
now you can
about
wonder
to
like,
ask two
what's
follow-ups
the
to
best
that.
one?
Yeah, is number one, did you find that you had to sort of, take a step back because everything gets exciting within the moment, so to speak, but sort of see, later sort of look back and say, okay, these are the 4 or 5 takeaways I had, would be my first question. Then the second question would be, did you see any sort of, or do you have a theme that you're seeing pop up amongst many traders that, you know, our viewers should know about when it comes to sort of that side of the trading mindset?
I haven't watched personally all the presentations because I had also other things
Your full day of work.
Yeah, pretty much with my own students. But what I think the common theme is the same theme as with strategies, like what is the best to choose from. And I think what everyone agrees on is choose what suits you. Pick the thing that fits you the best. And this, applies to strategy as well.
I was about to
as
say
to
that
psychology.
would be something that I think would go to everything that you do within your world of trading. You know, it's the same way I get people who ask, because, you know, I share my screens a lot on our shows, and people say, "Oh, what do you use?" You know, "Oh, should I switch? I use XYZ."
Yeah.
I said, "Well, do
Yeah.
you like XYZ?" You know, because it isn't. I just choose it because it was one that I found, and then once you tend to get a charting program, you stick with it. They kind of have you because they have their own little indicators, and the way you select or deselect stuff becomes intuitive. Right. And now when I try to use any of the other ones, it makes me crazy.
Yeah, that's exactly the problem, is to know what is the best choice, what is the best decision. This is something that, like, when traders come to me, this is the most common question. How do I know this is right? How do I know that this is what I should be doing? And because we don't have that certainty or trust, that's where a lot of people go and start doing all kinds of different things and start switching. And I have actually, so I know that the conference, you cannot go back and rewatch the recording. So especially for your viewers, I would like to just to give a little bit of a gist of my presentation.
Sure.
But it is connected to what we are talking about, because the difficulty to make the decision has to do with, I call it the trading triangle, has to do with the environment that we as traders are operating in. And just to give you a quick, can I share my screen?
Absolutely.
Okay, just to give you a little bit of a visual reference, I find that it always helps.
Absolutely, for me.
So let's see. So this is basically when we get into, like, when you find out about trading and you go like, oh my God, look at this potential. This is amazing, right? It's like the light open up and you're like, this is gonna be great. I'm gonna make so much money. And then very quickly after, you realize.
Yeah, that really does. That's a great picture. That's funny.
Yeah,
that is great.
You realize that there is so much you don't know, and it will be like this huge puzzle to figure out. And now you're completely not prepared for it. So first of all, okay, your expectations are unrealistic because not because you don't want to have realistic expectations, just because you don't know what's behind that wall, right?
Right.
So what end up happening is that you're ending up in this triangle. And I like to compare this to Bermuda Triangle. Okay. Because you just get lost in it. You literally don't know how to navigate it, and you get lost, and you're not prepared to navigate it. And the trading triangle is, there are three forces in the triangle that are constantly pulling on you in all directions. And the first one is freedom. And the crazy thing is that this is the same freedom that traders want to achieve when they come into trading, right? The problem is, but they say, I want to make my decisions. I don't want someone else to tell me what to do, right? I want to be completely free to do that. And the problem is that when you get that freedom, you don't know what to do with it. So you get lost in it. So you come into trading and you have so much choice. Like we just talked about, strategies, the way to deal with your psychology, platforms, what to trade, when to trade. And you're like, holy cow, what am I supposed to do? So it becomes very quickly absolutely overwhelming. You have a lot of tools, a lot of strategies, a lot of different approaches. Every time you talk to someone, there is a new thing. There's a new approach. There's a better approach. You're not making money, try this. Oh, this doesn't work, try that. And you're completely pulled by that force. So then the second one is the external chaos. And that's the market environment, right? That's what I call often, maybe I mentioned before, working conditions.
Right. Absolutely.
These are our working conditions, right?
They are.
So
that,
it's
are you trying to
risky.
scare everybody away today?
I mean, it is risky. You got to you got to know what you
I
deal
joke,
with,
but
right?
it's something we warn everybody, right? We bring up the
Yeah.
numbers that 87% of people who go into trading as a profession crash out.
Yeah. And that's why you guys trying to help people to bring, to give them sort of something they can hold on to, because you are like walking on the bridge and it's shaky, it's uncertain, it's unpredictable. You just don't know what's going to happen. At any moment, something can happen. So you cannot rely on those conditions to give you the certainty.
Absolutely.
And we are looking for
right
certainty.
now. We've talked about it. It's it's one of the most volatile times we've seen. Today's one of the few days we've seen sort of an update continue in a little bit, right?
Yeah, exactly. And I mean, do we like this kind of conditions? Do we like uncertainty? No, we don't.
No, we like volatility, though.
Yes,
traders
we
do.
like volatility.
It matters what type of trader you are. I should say day traders love volatility.
Well, I think there's a difference between liking and knowing that it's good for you.
Yeah.
Because volatility is good for us traders. We need that to make money.
Right.
But does it feel good if you are in a trade and this thing is volatile? Hell no. It's not. It
matters. Some of as we've talked about, for some people, that is the adrenaline junkie. Yeah, it does. That endorphin goes up, the dopamine gets going, and they're in.
Yeah.
I am not one of those people personally, but it's why I have said, and why we've seen over the years that some of the best stock traders also make very good poker players. Is that sort of that thing? I'm one of those people that when I played golf, like I've talked about too, I used to like to, if I was playing with somebody that I knew folded under pressure, hey, let's put $1 on that putt. Let's put $1. You don't put this one on the fairway. Exactly. It only took $1 to throw off their game, right? That's the same when you trade. We're all
and you hit the point
when there's no money.
You knew what the game was. You hit that point exactly right, because if you are aware of it, and you know how to play that game, then it works in your advantage. But if you don't, and most traders don't, they deny that it is uncertain and they don't want to deal with that, that's when it becomes problematic, because it doesn't feel good, because it just triggers you. It doesn't feel good. And that's when all the other golf players are making mistakes.
Yeah,
right?
Absolutely. You see it.
And then the last one is the internal pressures. These are all the triggers and all the noise that's inside of you that is reacting to everything that's happening. So this is really the mental, emotional, and physical pressure that you experience as a trader. So,
well, I don't know where you got that photo of me, by the way. Looking at my trades from last week. No, I'm joking. But yeah, I mean, but it is that's exactly what happens. You have some people who just aren't built to, not everyone is built to trade. It is true, and you've got to decide whether that their risk levels fit what you like to do. For some people, it just isn't. It isn't a good match. I found, students were usually much happier when I actually would come to them early on and say, I don't know that this style of trading that I'm teaching does fit with your risk tolerance. If we're day trading crypto, which is, 3 times the volatility of QQQ on any given day, you've got to have, that gut that can put up with those swings. And maybe,
Yeah.
it isn't for you to be day trading crypto, and maybe you should be in something. And again, there's a million different ways to trade and strategies. We have people on, here at Quasar that specialize in covered calls based upon owning the underlying stock. So it's it's even less risky than just buying a stock. So there are ways that you can trade, still be in the game, so to speak, and not be a day trader.
Right. And the key to this is to first accept that, that you have to look at yourself and see what suits you, and not at the other guy who just made $20,000.
Right. Absolutely. Because it's just everybody, once you push that button, we talk about it all the time. I tell people here what I'm looking at, what I like or don't like about a chart, a stock, or, crypto from a fundamental level. But we're not the ones that are pushing that button to make a buy signal. You've ultimately got to make that decision. We don't tell you what to buy or what to sell here. We just tell you what we're seeing in front of us so that you can make the most informed decision when you do, right?
Yeah. And a lot of times that's the biggest problem, is this external focus instead of internal focus. And how you always hear ego is the biggest problem in trading. I like to see the ego as external focus. The moment that you start externally looking like, okay, this guy made this much money, I should trade his strategy. As long as you keep pushing it to the outside, it's ego. But if you do the I go, have the internal focus and see what is really the best thing for me, everything changes, because those three forces can make you crazy. They will be pulling on you, and then ultimately your goal is to move forward, right? This is your goal. This is like Bermuda Triangle. This is your goal, but you're trapped here, and you're being pulled. And if you don't know how to navigate those forces, you will never reach your goal, because you will be just fighting the market. You will be fighting your own demons. You will be lost in the freedom of choice and everything that's happening. So really the alignment with yourself, with focus internally, like what suits me, what is the best for me, making those decisions in your best interest. This is really what changes everything in trading and helps you to achieve that freedom that you want, really being able to handle the freedom that you already have, because we already have the freedom. The moment you step into trading, you're free to push the buttons. You're free to buy, sell, whatever you want, how much you want. If you cannot handle it, you won't get the freedom that you actually want. Just because you can only get the freedom if you can handle it. Otherwise, it's chaos. You become uncontrollable.
Right. The way I would look at it is you can only take advantage of the freedom. The freedom's always there to grab. It's whether you can actually grab it, and see it through the clouds, almost is the way you're saying it, where you had that one that had the chaos and the pressure. That's the idea is, do you have the systems in place, either within yourself, mentally, or actual systems like some of your mindset tips that I use in my habit tracker and some other things in place that lessen that chaos, that lessen that pressure, because they're going to be there. I think that's what's important to explain to people, is that those two things don't go away. It's how you manage them. And as you said, react before, or react to these different pressures. And chaos is going to, direct how you trade. So I think that's what's important there, is that people might think that, oh, well, with Agnieszka's system, there's going to be no more outside pressure, no more internal pressure, outside chaos. No, that's not what we're saying. What we're saying is, we're here to help guide you through those processes, to limit them and their influence into you, and I love the way you have it, because the freedom is below your feet and the other two are on the side, because what it is you do have to push your way through those two to be able to take advantage of this freedom. So I love those slides. That's the first time, just for viewers, so that's the first time I've seen them. But that is, the key.
Yeah. Yes, you are the key. And I think everyone, like when we're writing tweets and they're like, the key to success is this, the key to success is this, the true key to trading success is this. No, you are the key. You as a trader, you are the key, because you are the person who is navigating through this triangle and decide how far you will let those forces pull you on a side. So you start taking detours and you might be circling in the triangle forever if you
Right.
don't learn to navigate those forces. So that's what I wanted to bring in today. I'm gonna stop sharing screen, because
Okay.
this is like the basic key, I think, to understand what is actually happening in the market. And then you can, all the tools that are being offered by psychologists, trading mindset coaches, and everything is to handle those forces.
Right. Absolutely. It
So
is.
it
It's
could be
about
the journal, it could be the lifestyle, it could be how to handle your internal triggers and appease your nervous system. It could be changing your beliefs and everything. And in my approach, I try to do that holistically. So I focus on you as a trader and help you to navigate all those forces so that you
right.
can focus and go through that triangle to your goal.
Yeah, which is exactly, and that is what you put in place is, and that's why I mentioned about the fact that they don't go away. That it's about how to navigate through them, how to
Yeah,
lessen them, how to set yourself up to succeed with these
right.
pressures coming.
Right.
And I do want to point out one of the things that you have, and you informed me today. I did not know this, that you won an
Yeah,
award for this. So I asked
I
at the right
know.
time. You do a weekly podcast, right?
It's bi-weekly
A
actually,
bi-weekly, sorry.
and it's yes, no worries, and it's published every Friday morning. So the latest episode actually we had was with Greg Singleton. It's that little orange picture under the newest episode. If you scroll a little bit up. So yeah, we had Brett on in July, yes, but then if you go to the bottom, so these are the most popular, and then we have the
Oh, here
newest
we go. There
episode
you
is yes, and Greg actually, so I met Greg not so long time ago, and he was one of the presenters during the conference.
Oh, wow.
So yes, he's a perspective coach, and he is also a trader. So we had a lot to discuss on our podcast, and it was absolutely fantastic. I enjoyed the conversation a lot. We talked about expectations, but we covered a lot of other different things as well. So if you
Fantastic.
haven't had a chance yet, I definitely recommend it. And yes, my podcast won an award last week for the best trading psychology media. So I am absolutely thrilled to have that
That's
recognition.
fantastic. So it's
Yeah,
well deserved without a doubt.
thank
You
you.
provide so much insights for people, and I got to be honest, you provide so much stuff for people that is free. We pointed out here, about your individual coaching sessions, but also all the things that you offer on your website. I do have it running across the bottom how you can find Agnieszka both on her social media and at her website. I do recommend everybody go take a look. She offers a lot of free resources and stuff that you can really use to improve your trading, and decide whether or not her type of mentorship is something that would be a good match for you. I can tell you that she is probably one of the most dedicated coaches I've ever met. She tells me before we even talk about how we're doing, she's talking about her students always, and successes that they have. And that's what you want to find in a coach. So I do recommend that for sure. So
Thank you,
congratulations
Howard.
on that award. Not surprised at
Yeah,
all.
thank you. I was actually, I completely did not expected it, and I literally found out from people on my email list and from my students saying, "Hey, congratulations on the award!" I'm like, "What award?"
That's,
So that was
you think they would
definitely
tell
an.
you first so that you could take advantage of it.
It
So
was
you
it
don't,
was during the conference, so I did not.
oh, you were
My
so
fault. I
focused.
didn't watch it.
Right.
So
That's
yeah, but it
funny.
was absolutely fantastic. Yeah, but it's a nice way to find out. It's like you just what the word.
Yep. Yep.
I enjoyed that.
Agnieszka, my last question for you today is,
Yeah.
any advice on how to manage sort of the craziness that we're seeing right now you know, in the outside. Some of that, like we said, that external chaos is not going away right now. If you had to sort of give anybody, you know, a idea, what would it be?
Yeah, I think that chaos, and like we just talked about, chaos always brings a lot of hesitation, and often we project that hesitation on ourselves. So when you look at the chart, just remember that you will be managing a trade. So it has to make sense to you. Even if you hear other people taking trades, like, oh yeah, and I took this and I made this much money, just do everything to tune out the noise and focus on yourself, because whatever trade you take, you will be in it, and you have to have the feeling of, I know why I'm in there, I know what my setup is, and just wait for that. So having that integrity and self-focus to make sure that before you take a trade, that you understand what's happening. And this morning we were, on Discord with my students, and one of them said, I am just watching because I don't understand what is going on.
Yeah.
And that's perfectly fine. Just having that self-compassion for yourself. Like, people might be taking trades, probably they either, maybe they're gambling, or maybe they do understand, but I don't.
Right.
I don't see what's happening. So I'm staying away until I can feel like, okay, now I know what I'm doing.
Yeah,
Because
Steve said that this morning about Bitcoin. Steve sold a lot of Bitcoin a few days ago when it was at 98. He said, with the amount of money that MicroStrategy is spending, the fact it's not going up, it has him a little concerned right now. It's not making sense. So his trade is no trade right now. We talk about it all the time, right? That sometimes no trade is a trade. So
absolutely.
I'm going to let you get out of here.
Make sure that it makes sense. Make sure that it makes sense.
Well, make sure the thesis is there, right? Or you can't trade. You have to have the conviction, as you just said, and as you've also mentioned, you have to have your stop losses and you have to have your take profits in place also, because these things hit very quickly, and what was your thesis could turn around in a matter of a tweet.
Absolutely. And there's one thing that one of my students said, and I thought, my God, you know what? This is so profound. It's a very simple sentence. If you're looking for a setup, he said, if it's not there, it's not there.
Yeah.
And I thought, gosh, this is actually such a profound statement if you think about it. If it's not there, it's simply not there. Don't try to make it up. Don't try to imagine.
Don't force it. Always play the hand. We say that, play the hand in front of you. Too many times people are perma bulls or they're perma bears, and they're waiting for a setup to hit, and they think they're there. And then that next thing you know, you blow through an all-time high, or the opposite. Not every stock bounces back. We've seen enough, right? We just saw Spirit Airlines and others that went under. So, you have to keep that in mind for sure. It's the same way right now. Tweet analysis is just as important as technical analysis. Is a crazy thought to have in the markets, but it's really what we're seeing. I know I'm trading differently. I'm going a lot more neutral at the end of nights than I used to, based upon, you don't know what happened. Hey, listen, last Sunday, talk of tariffs was bad for the markets, right? We woke up and everything was dropping. Last night, talk of tariffs came out. This morning,
good.
Been, a pretty good day. We are fading, but we had a good, we're still up 1.13%. So it's looking good. Yeah. Thank you so much, Agnieszka.
Yes.
We will see you on Wednesday, like always. Thank you again.
Fantastic. Thank you so much,
appreciate it.
Thanks, everyone. Have a good day. Bye.
Okay, everybody. We are right about at the 12:30 hour here. We're going to bring in Mark Putrino to discuss what's going on in the markets. But before we get there, just wanted to say we are fading off a little bit here. Hourly chart, we kind of maxed out about 9:30, 10 o'clock here on the NASDAQ, pulling back a little bit. SPY has pretty much the same setup here. So we're seeing a little bit of profit taking come in, still up about 48 basis points there. Dow is up about 10 basis points, and again, been sliding back throughout the day. Okay, well, excited to have a new guest joining us today, Mark Putrino. How are you doing today?
Hey, I'm good. How are you?
I'm doing fantastic. Thanks for joining us. We really appreciate it. Market's a little wonky, seem to be turning over a little bit now as we're getting into the afternoon hours here, huh?
Well, yeah, but before we get to that, I just want to say in reference to what your former or the guest was saying, I do a lot of history. I just love to read history. And I think it makes you a better trader because you realize that nothing is really new. Nothing is new under the sun. I mean, the names have changed and the people have changed, but the psychology hasn't changed. And one of my favorite lines is by a guy named Jesse Livermore, who was supposedly this great trader back in the 1920s. And I'm paraphrasing, but he said something along the lines of, I didn't make my money by being in the market. I made my money by being out of the market. And I think what he meant by that is just what she was referring to is you got to have the emotional discipline that if there's nothing going on or really nothing really kind of triggers you, it's okay to take a day off or to not take a trade. And a lot of people, especially newer traders, they feel as though they always need to be in the market. They have this fear of missing out. And that causes over trading, which is one of the main reasons why a lot of people aren't successful. So that was a very interesting discussion.
Yeah, I appreciate that. Yeah, without it, I mean, Jesse Livermore, first of all, for those that don't know, one of the first great technicians of trading, lost billions, well, not billions in those days, they would be billions in today's dollars, but lost and made his money many times over. And, a very interesting story if you haven't read his life story. But you just said it is, we tell people sometimes no trade is the trade is important, especially with all the data coming in right now. And, you look on Twitter and someone saying, hey, I made, I come from the world of crypto. So I made $1 billion on the new latest meme coin. So everybody gets that FOMO like you talked of and joins in. And, the other part is, I know you have a background with CMT, who we work so closely with at Quasar. Some people will talk themselves into any setup too, right?
Yeah. Yeah, absolutely. I have one of my students said something very profound, going back to these like very simple statements that could be very profound. He's like, if the fish ain't biting, don't go fishing. If the fish are biting, throw in a couple lines. So
yeah, we have a gentleman on that used to be in charge of JP Morgan's currency trading, and he says also the same way is sometimes don't be able, if you see all the fishing lines on one side, don't necessarily go jumping in with them. Maybe it's okay to nibble on the other side. Make sure that boat's not about to tip over. You get people again trying to say don't fear, manage that FOMO sometimes. Don't just jump in because everybody else is in.
I think people don't realize, and this isn't just beginners. I mean, I've known, just to give a little bit of my background, I got brought into the industry by Mario Gabelli. He hired me out of business school, and I worked on his broker dealer desk as a market maker for about 2 years. Then I went over and I spent some time working with Steve Cohen from at SAC, the guy who owns the Mets now, and zillionaire. And that's where I really started to get into chart reading and understanding the psychology, because that's what he talked about all the time. As a matter of fact, there was a full-time psychiatrist on staff. Now, I was one of the low men on the totem pole, so I never talked to him. But if you were a portfolio manager and you were having a bad day, it's like he would go into this guy's office. It was almost like he was like a trading coach, right?
Yeah,
so
absolutely.
When one of the greatest traders in history, certainly of our time, Steve Cohen, puts that much emphasis on psychology, it makes you understand how important it is. Because here's the thing, right? If it was 20,000 years ago and you were walking down a trail and some saber-toothed tiger came after you to start, to eat you, you would get afraid. And that would be a good instinct. It would make you stronger. It would make you more focused. You could run faster. So people evolve this emotion of fear. But when it happens in the financial markets, fear makes people do things that are dumb. Now, I like to use this as an example. I've always said I've never seen a bad paper trading system. I've never seen a bad back test.
I've never heard that one. I like that. I'm writing that one down.
That's because here's the thing, like just say you have a system, and when I was back in my Wall Street days, there'd always be people coming by trying to raise money to manage and so forth. But just say theoretically you have $10,000. Okay, that's a lot of money to anyone. And you have a paper model that says, if it gets to 15, I'm going to sell. I'm going to take a 50% profit, and that's it. So, you're watching the stock, and it's like, oh, hey, it's at 12, it's at 13, it's it's at 14, maybe it goes back to 13 and a half, but then it gets to 15 and you sell it. Wow, this is really easy. Why doesn't everyone do this? Now, let's just pretend you had a real $10,000 in the market and it wasn't just on paper. It gets to 11 and you're like, that's $1,000, man.
Yeah.
If it gets to 12, wow, I know my target's 15, but $2,000 is a lot of money and I don't want to lose it. And then it goes to 13. It's like, all right, you know what? I'm out. I'm selling it at 13. And then it ends up that you were right and it goes to 15 and you left $2,000 on the table because people have that fear of losing a profit. And the same thing happens on the downside. Say on your paper trading, you say to yourself, all right, if we get to, I buy a 10, if we get to 9, I'm out. I take my loss. I move on something else. On paper, that's easy. But in real life, it's like, wait a second, I'm down $1,000 here, man. I don't want to lose $1,000. I don't want to have to tell my friends that I lost. I'm just going to hang out here and hope that it comes back, right? And hope is not a strategy. And the difference between my experience when we're talking about like proprietary traders or typical retail day traders, the difference between success and failure is the successful people don't take big losses. They take losses because everyone takes losses, but they don't take big losses. And this is where your emotions get involved. And I don't think you need to go to a psychiatrist or, do some whatever, go into the woods and study with a shaman. But I think just being aware of it and maybe just asking yourself, why am I making this trade? Do I have a logical reason for making this trade, or am I making this trade because I'm bored or because my buddy told me I should?
Yeah, you hit on so many different things I would ask questions or expand on. A couple of them, as you said, is, when you have real money on the line, you get a lot different with your decision making. So, you have to take that into account. Like you said, so many times you see the paper trade is so easy, and then, they get into the real world and it isn't as easy as it is. And then the worst case scenario is the person who does hold on to that one that went from 10 to 9 and to 8 to 7. And then by, some lucky bounce, it did pop up to 12. And now they think that, oh yeah, no, I know the markets and I knew what it was going to do. And then they do it and they burn out their entire account the next time.
Well, I'll tell you what, I've over my, for the 25 years I've been doing this, I have seen more people get destroyed because they had initial success than people that made mistakes at the beginning. Because these people come in, as a matter of fact, the last institutional money manager I worked for, which I left in 2016, the place was there for 30 years. These two young guys took it over. They had a little bit of luck and they thought they were brilliant and they ended up destroying the place. So sometimes a portfolio manager might come along and whatever style that they do is in vogue or it's really working. And, there's a saying on Wall Street, it works until it doesn't work, right? So I've seen people that because they had initial success, they thought they were really smart and they ended up putting all their eggs in one basket. And inevitably, where this goes, they got wiped out. The people that come in and say, wait a second here, I lost a little bit of money on my trading. Maybe I should go talk to someone like myself, Mark, or some of your other guests who kind of knows what's going on here because it doesn't need to be as mysterious as people think it is. It's about supply and demand, right? If there's not enough supply, the market goes up. If there's not enough demand, the market goes down. Pretty simple, right?
Yeah, you would think that is the case. Others make it a lot more complicated than it does need to be. I did want to point out how people can find you here, Mark. I have pulled up here your Substack. I know that you are very active there. I've seen 3 posts already today as I've been on the air. So you are definitely active there. Do you want to tell people a little bit about what you do out here?
Yeah. Can I share a screen?
Absolutely. Let me stop mine.
So that is, all right, share screen.
And hi, James from Ghana. Thank you for joining us and thank you for your service.
Okay, so can you see my screen now?
I just got to hit the button here. There you go. You're good to go.
Okay, cool. All right. Well, one of the things I do is I write for Benzinga and I do a stock of the day. And actually, you know what? I should take that back because this is not my stock of the day. I did a different one. But this is something I was just looking at here. The Zebra Technology, which reported today. And right here, when you look at a chart, right, I think if you look at it through the mindset of, don't think about this as you're looking at Zebra Technology. Think about this as you're looking at a chart of the people that are doing the trading. Now, you don't need to be a former hedge fund trader or a market guru to see that this 360 level was important. Back here, we got up here and we got to resistance. And then people that sold thought it was easy, and eventually it got higher. And a lot of people that sold say, you know, I'm going to buy my shares back if I can get them at the same price that I sold them at. So if you have enough remorseful sellers from here trying to buy back shares over here, the level that was resistance can convert into support. And this happens all the time in markets. And then you could see again, the level that was support became support again, and it became support again here. And this is where we're trading now. This is also because of seller's remorse. People sell and then the price goes higher and they say to themselves, you know, if I can, I'm going to buy my shares back at the same price I sold them at. And the reason why, I think this is a really, I mean, you can even see here, right? What was resistance here became support over there. So the reason why you can see the same chart patterns on security as different things, like we could look at Bitcoin and find something like this, or we could look at oil or gold or whatever. It's because the people that are doing the trading of these various securities have the same emotions. And that is what we see on charts. Now, something to consider here is it's oversold and it could be getting set up for a bounce. A lot of times when things get to a support level, some of the people that are creating the support with their buy orders, you know, some of the buyers, they start to sense, gee, there's other buyers around here. That's why the stock's not going any lower. I know the seller is going to go to whoever's willing to pay the highest price, and I don't want to miss out. So I'm going to increase the price I'm willing to pay. Someone else says, that guy's going a little bit higher. I'm going to increase the price I'm willing to pay. And you get this snowball effect. And this is why a lot of times when you get to a support level, you rally. So, you know, trading doesn't have to be that complicated. I mean, just a simple strategy of like, all right, look for stuff that's at support and oversold, you know, and just wait for the reversal to start.
Yeah, I mean, I know successful traders that use 200-day MA, and that's basically it. You know, as things, you know, react in certain ways to that, that's all they need. That's in their mind. That's it. I'm a big firm believer in support and resistance, like you are there for price action, and that especially watching the psychology. I guess that would be a question that I think you've already sort of answered, but it's almost as much, you know, so many people think technical analysis is so much dollars and cents, and sometimes it's really the emotions that are at play that you're really tracking or that you're looking to come into play, right?
I think a lot of people, and even people that are, you know, considered more experts, people you might see on CNBC or whatever, they don't really seem to understand the essence of technicals, even though they've been doing it for a long time. I mean, when I look at this chart here, you know, I could just see so many things. Like, for instance, we've all heard the expression, well, we've probably all heard the expressions, gaps refill, right? Yeah. There's a gap. Now, one of the reasons why we get support, as we've seen, is because we have remorseful sellers trying to buy their shares back on the way back down. If we gap, meaning we closed there, and then the next day we opened up here, there was no trading at these price levels in between here. So guess what? If there's no trading, there's no one who sold who's going to be trying to buy back on the way back down. So a lot of times if you get a fast move going one way, and then you get into consolidation range and you reverse and you get back to those same price levels going in the opposite direction, you can make a fast move right back through. You can see that over here. See, make a fast move one way, spend some time consolidating, reverse, get back to those same price levels coming in the opposite direction, and you make a fast move back down. Now, this technically isn't a gap, but it's the same kind of a principle, right?
There's no price discovery in that zone.
Yeah, there you don't. If we don't spend a lot of time trading there, you just don't have a lot of people who, for lack of a better term, people just like don't care. You know, if someone sold their stock at 390 and then 2 weeks later it's back to 390, they're going to have an interest. Be like, oh, really? I sold it at 390. Oh, let me go take a look at the chart. Let me see what's going on. But if it's like, you know, if it was where a person didn't sell or buy, they wouldn't really care as much. So this is what I try to teach, is just how important the psychology is. And you can see it in so many different things in our society. Like I used to live in Byram, Connecticut, which is part of Greenwich, Connecticut. and it's the most southwesternly state in Connecticut. It borders New York. Now, they used to have the Powerball was legal in Connecticut, but it wasn't legal in New York. So whenever the Powerball got up to like $500 million, because of course, $200 million isn't enough, whenever it got to 500 million or whatever, downtown Byram would be completely mobbed. The first exit in 95 is exit 2. There would be a line going down I-95 like miles, right? Downtown was gridlocked. There was lines out all the stores. Guess what? You could have just driven to exit 3, got off, and walked right into the store.
Yeah, driven 10 miles further, and it would take you a quarter of the amount of time. Absolutely, yeah.
Yeah, so like the people that are subject to that herd mentality, and I think it's because of evolution. I think maybe there's safety in numbers. So when people see a herd, they want to be like a member of it. And those are the people that lose money in the markets. The person who got off, who drove up to exit 3 and got off, and bought their tickets there, is the person that makes money in the market. So I find
absolutely, I love that analogy because it's so true. We see so many times that what ends up being a contrarian play to the market is what is the winner, right? When everyone's looking to the left-hand side, somebody's over on the right-hand side making a trade, and that sort of becomes the way of the market, because then the momentum, and I'd point out it's not even emotion on some of these things that you point out with charts, it's also how algorithms are programmed. So things are going to happen at those levels because they've also been programmed into these machines now.
Yeah. And they're based on historical patterns, which go back to the psychology, right? So
so that's the other part that I think it's funny is it's proven to be even more of a component as algorithmic trading has come in, where I think a lot of people would have said the opposite they thought would happen, because emotion is going to come out of the game. The computer doesn't have emotion, but the computer's using what was previous emotion as its programming.
What amazes me, and here's some good action here in NVIDIA. Finally broke this resistance.
Yeah.
But I mean, if you think about this, the preciseness of some of these levels is just, it's like astonishing.
It's
in terms
amazing.
Of like,
it really is.
Like look at this, right? This is the technology ETF. So this is a sector that's worth, how many trillions and trillions and trillions of dollars. The symbol is XOK. It tracks the technology sector, the S&P 500. Yep. Like this here, closing price on this day here, 238.85. Closing price on this day here, 241.39. So we're talking about a $240 security that closes within pennies of each other.
Yeah, absolutely.
And if you really think about it from a fundamental point of view, like this stuff shouldn't happen. Like, look at this. Opening trade back here is 224.43. The low trade on this day, 224.45.
Yeah.
So we're talking about a matter of pennies on something that's worth trillions and trillions and trillions of dollars. Now, I'm old enough to remember the days before ETFs, unfortunately. And, there was support and resistance back then, obviously, but I don't remember it being like as precise as some of the levels can be now. It's really kind of uncanny. And, like let's look at, let's just take a look at oil just for,
and like you said, part of that is those ETFs that are auto-weighted certain ways. So a move in price creates an immediate reaction that you didn't used to see.
If you only looked at the market through the eyes of a fundamental manager or, a buy and hold psychology or whatever, there's no way you could ever understand how this stuff happens. Like here's oil. Now let's think about how big the oil market is. And you got, all this stuff going on in the Middle East and, all this, whatever. Oil is almost unfathomably or unfathomably, well, whatever. So big, it's hard to imagine, right? And look at this. For 2 years, every time oil got down to around 67.30, what happened? It rallied, found support. Then you get the buyers outbidding each other. But, this just, if the market followed a random walk. Now, back when I was in business school, that's what we heard about was the market follows a random walk. And, it doesn't. If it did, there would be no such thing as a support or resistance level. All levels would have the same amount of importance, right? I mean, it would just really follow a random walk. Now, this is one of my favorite charts here of all time, of the Dow Jones going back to the very beginning of the Dow Jones. The Dow Jones's initial print, here's a good trivia question. When it first came out in 1896, the first print was $40.94.
Okay, I didn't know that one. Yeah, that's a random number to start at.
Yeah, right. And now look at this back here. So this is 1907.
Yeah,
We've come to a big sell-off here.
Spot.
7 years later, this is the beginning of World War I. Where do we find support? At the level that was support before. And you can see up here. Look how precise this resistance is. This is 1905. This is 1909. Like within pennies. And look,
and this was
right around 100.
Using a ticker tape to trade and graph paper.
Yeah, exactly. Like, they didn't have, a lot of places didn't have electricity. And people say to me, like, how is it possible? How is that possible, Mark? And the answer is, well, a lot of things have changed, but what hasn't changed is human psychology. And when we look at a chart, if we're looking at it the right way, that's what we're looking at. We're looking at human psychology. So the names have changed, the companies have changed, the technology has changed, but human nature hasn't. Look at this support here from 1946 through 1949. So that's, post World War II. I think this is another kind of an interesting thing here too, for those of you who have like a historical kind of bet. And I think it makes you a better trader because it makes you realize that there's nothing new. People talk about buy and hold, buy and hold, buy and hold. This is the Dow Jones. If you bought the Dow Jones when it got to 1,000 in 1966, you wouldn't have made money until 1982. All right. And there were no ETFs back then. So this is just a bunch of people saying, hey, if the Dow Jones gets to 1,000, I'm going to sell all my stocks.
I'm selling it. I like that round number. It goes to, and like you said, it goes to everything. I came from the world of crypto, and we, when it was going, no, technical analysis doesn't matter. It doesn't. It does. Of course it does. It matters in every market, in every way that you go. Look at currencies that trade trillions of dollars back and forth. They all follow it. There isn't any, commodity or stock or option that doesn't follow it to a T.
Here is Bitcoin, right? Now, I do like my morning calls and so forth. So we've been looking at this level down here. But as you can see, just like we saw in the Dow Jones, 100 some odd years ago, levels that were support can become support again. Levels that were resistance that can become resistance again. Now, I don't know what happened on this particular day here, February 3rd, but it might not be easy to see the low trade, but the low trade on this day was
the wick was all the way down.
91.5. And what line is this here? 91.5. So
absolutely,
right there, 91.5. So it's the same thing. It's people. This is people. People that bought here trying to sell to get out of break even.
This is. I have Big Beat's been yelling at me because Bitcoin won't take off. I'm like, I'm happy as can be because it's in a great chart. Oh no, he's coming to join us. I said his name like Gazoo, and you just came in the room. I didn't know that was going to happen. Now I'm scared. He's mad at me. I'm like, this is a great trading range. Make money. So of course he sold some. I'm sure he's going to buy it back in here now and then tell me he created the wheel again.
I am super excited, Mark Putrino. How are you, man?
Oh, I'm hanging in there, trying to fight the good fight. Got two daughters.
I agree with you. I'm so super excited here, Quasar Markets, that you're joining us and helping us out, man.
Yeah, I appreciate it, and I appreciate you guys putting me on your X site because this stuff is all kind of new to me. I mean, I don't mean the trading part, but it's like. Does it go on X or does it go on here or does it go on here or does it go on there? Or how do you put it on YouTube? There's like so many different little nuances. It sounds easy in theory, but to practically put stuff out there.
As long as you and I have been in the markets, for me, 33 years, I mean, I've seen it all, right? You've seen it all. And I think what's cool about it is the new technologies allowed us to put this everywhere, LinkedIn and Twitter and all the, and Facebook as well, and just kind of pump it out there. But, I think one of the things that we've done at Quasar Markets, and this is why we love having you on, is because we want to bring the real people that are doing the real things here, right? With CMT Association and our friends, Jay Woods and Tyler Wood. I love this, man. And I think people out there need to understand that this is exactly the kind of thing that we're doing, that giving real knowledge. You're actually a member of CMT. I think a lot of people don't understand what that is. The people that make these interesting observations and these squiggly lines on your charts, these are the guys who do it, right? And you're part of that. I'm excited about that.
Yeah, when I first got my CMT, I don't remember exactly, but I think I was only like the 170th or the 160th ever. And believe it or not, I took my first CMT class was taught by Ralph Acampora at the World Trade Center. So that's kind of where I first got my start.
The godfather of technical analysis. I love Ralph. It's the uncle to Jay Woods as well. But man, I tell you what, Mark, we want to have you on here several times, man. How about weekly?
Hey, man, whatever works for you guys. I got a lot of extra time on my hands these days, so I'm looking for stuff to do.
We're definitely going to have you on weekly for sure. We'll get you all set up with our, contributors list and get you involved there, Mark. Thank you so much for coming in and giving us a full half hour here. I only asked him for 20 minutes, so I feel bad. We'll let you get out of here. I didn't know Big B.
If you guys didn't kick me out of here, I could go till 6 o'clock, So.
Well, we love it.
Hey, leave him on. I'm okay with that. That's good stuff.
Longer view stuff. But markets are continuing to climb up a little bit. Guys, you think we're blowing off steam here today, or are we going to continue to blow through this?
Well, I think, as I said earlier this morning, I think the melt up is in full swing here, right? There was some profit taking a little bit here in the afternoon, which is normal after 10 o'clock. We know the silliness. But I think the continue of the melt up and the burning of some zero DTE puts on some of these, especially the Mag 7 stocks, are happening. But I'm going to leave that to Mark. I'm going to jump out of here. I just want to say hi, Mark, and thank you for being a part of Quasar, man.
Okay, thanks a lot, everyone. We'll see you next week.
Thank you, guys. Appreciate it so much.